So many of you remember me from my last PayPal video. It got pretty close to 10,000 views whenever the stock sold off. And I said PayPal was an amazing buying opportunity around $61 per share, around $60 or $61. I even said PayPal to me looks like the next Meta, mainly because of the bad sentiment. And whenever that bad sentiment reverses, a lot of good things could potentially happen to the stock price. And a lot of you even followed me just because of my PayPal video. Well, here we go. This is another earnings report from PayPal, and the stock is down a lot. Now it's sitting again back at around $65 per share. I mean, to me, this market is insane how it's just rewarding any AI stock like Nvidia with very bad fundamentals. But you have companies like PayPal with very good fundamentals trading at a very fair price, even an undervalued price, and they just get punished on some, kind of numbers, which we're gonna talk about today. Now, some of this sell-off might be warranted, but I believe this is another overreaction from the market, and I'm gonna share everything about this earnings report in this video and actually update you on my valuation model to determine the kind of upside we can get if we buy PayPal at $65 per share. Now, if we take a look at the earnings report, this is one of the first things that freaked out the market, and it's mainly the active accounts declining. Now, I get that a lot of you kind of told me on Twitter and on YouTube that they have payment services, so they don't really need the active accounts for them to be, to show profitability or to show a healthy business growth. And I do get that, but this is not a good, sign at all. And everything has pretty much peaked in Q4 of 2022. I'm going to talk a little bit more about this, but active accounts have been declining for 2 quarters in a row. Now, if you look at what really, freaked out the market, and this was mainly the operating margin loss. And if you look at the operating margin, it also has been declining. If you notice, it also peaked in Q4 of 2022. This is non-GAAP operating margin, the adjusted one. It peaked at 22.9%. Then it went to 22.7%. And I did say in my video, this is something that we have to monitor because it's not a good trend. But in this quarter, it declined again to 21.4%. And this is pretty much 2 declines in a row. And it's not a good sign for PayPal, but one of the reasons why it actually declined so much to 21.4% is the CEO pretty much said because of some increased losses in the PayPal business loan portfolio. So it's expected to be actually some kind of a temporary problem. But the main thing was PayPal, they were giving loans to a lot of companies that they shouldn't have been given loan to, between $5,000 to $150,000 to repeat borrowers. So it's, small loans, nothing crazy, but they did give a lot of them, and a lot of those companies did not deserve those loans. And, a lot of companies made those mistakes. But now PayPal is correcting their mistakes. They're tightening their, standards, their underwriting standards, which is why a lot of, those losses are showing up in the portfolio. But I personally believe that this is, again, short-term noise, and it's just a massive overreaction in the market. And if you look at where PayPal is priced at, yes, the operating margin is much lower than Q4. But if you look at where PayPal is trading at, it's trading, at record lows at $65 per share. The stock peaked at 300, now sitting at 65. So if the stock was priced to perfection, then we would say, yeah, this is very bad for the company. It deserves to sell off 9 or 10%. But this is, the stock is priced at record lows. And I personally saw that the sentiment would be so bad with PayPal that it would go up on such news. But I've been wrong so far on this quarter, even though PayPal rallied a lot since I made my video. But this is another thing that, the market freaked out. Something else that the market freaked out about, in my opinion, is the declining EPS. Yes, the non-GAAP EPS is up year over year, and this is a very good trend. Now, in Q2 of 2023, it was $1.16. In Q2 of 2022, it was 93 cents. So this is a very good improvement, pretty good growth over pretty much 24%. So this is great. But as you can see with everything with PayPal, it has peaked in Q4 of 2022 and it has been declining since with operating margins, with active accounts, and also with the non-GAAP EPS. And all those 3 are not good trends with the company. And this is something we have to monitor in the future, if this is some kind of a temporary problem or if this actually continues. But the market, in my opinion, is just just freaking out about all those things, and it's mostly short-term noise. Now, what I really like about PayPal is the capital allocation strategy. Most companies, they buy back stock at 52-week highs, and when they go to 52-week lows, they start doing CapEx spending or even issue shares. And most companies, they really don't know how to implement a good buyback program. But PayPal has been doing something smart with their capital allocation. And if you look at the dark blue here in 2022, most of their spending went to share repurchases, a little bit in CapEx and acquisitions. But 2023 year to date, pretty much their entire free cash flow has gone to share repurchases, and they're buying back stock at lows. Whenever the stock was sitting at 52-week highs at 300 per share, the company was doing some acquisitions and some, sales. They were not doing much buybacks, and this was the right thing to do. The best time to do buybacks is whenever your stock is sitting at record low valuations, like what's happening with PayPal. And I really like how the management is actually, doing this. I'm not gonna go into the balance sheet of PayPal a little bit, but it's just, it's great balance sheets. They have over $10 billion in cash and shorter-term investments. Those $10 billion pretty much covers their entire long-term debt of around $10 billion. The current assets are $54 billion, much higher than the current liabilities of $41. So PayPal has a pretty good balance sheet. I'm not gonna waste your time on it, but I'm gonna get into my valuation model to determine if PayPal is a good buying opportunity at such prices or not, of $65 per share. For my gross numbers, I used something like 9% from 2023 to 2027, which I believe is fair. If you look at the analyst numbers, they have it around 9%, even an acceleration between 13 to 15%. Now, I personally believe this is not going to happen. It's possible, but it's very rare when you have a company that goes, from massive, growth 20%, it goes down to 8%, and then it reaccelerates to 15%, unless they come up with some kind of a, game-changing product, which I don't know how PayPal can even do that. I personally believe it's not going to happen, but I think 8 to 9% is very fair, and this is what I used in my valuation model. Net income margin, 19%. I kept it at 19%. It's pretty close to 19%, so it's 18.7, but I just put it 19% in the valuation model. PE ratio, I put it in at 18 times earnings. Now, this is something I'm going to use different case scenarios, but if you look at where PayPal is trading at, it's trading pretty close to 15 times earnings, which is very, very undervalued, much lower than the mean. The mean PE ratio for PayPal was 32 times earnings, and now the company is trading pretty close to 15 times earnings, which in my opinion is, it's undervalued. I did say it in my videos before, but I'm going to try the 15 times and I'm going to try the 18 times. But I personally believe with the kind of net income margins that PayPal is actually putting and the reacceleration of growth, I personally believe PayPal should be trading at 18 times earnings. Now, if PayPal trades at 18 times earnings and the company continues to buy back 2.5% of the market cap, like they've been doing for the past 2 years, PayPal would return 106% on the upside, or 15.6% compounded every single year for the next 5 years. Now, this is actually not bad at all, and you would double your money if you buy PayPal at today's price. But I personally have a fear that maybe the growth in PayPal doesn't reaccelerate and PayPal's growth pretty much stays flat. And if this was the case, the best way to value it is to use 15 times earnings, which is where PayPal is trading at right now. And if we use the 15 times earnings, this would only give us 74% on the upside, or 11.7% for the next 5 years. In this case, if you want to take a margin of safety to double your money with PayPal over the next 3 to 5 years, you would have to buy PayPal at $58 per share. And $58 per share, it's not far from what it was, pretty close to the 52-week lows, and now sitting at $65 per share. I think an amazing strategy with PayPal is to sell, puts. I've been selling puts on PayPal whenever it got to 52-week lows. I think this is an amazing way to collect a return. But PayPal is not a bad buy at such prices, but if you want to take a margin of safety in your investment, somewhere close to $60 or $58 per share would be an amazing buying opportunity for PayPal. So thank you for watching the video. No financial advice, of course. I hope you enjoyed it. If you did, please press the like button and maybe consider subscribing. So I hope to see you in another video.